welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. We are a week into 2018 and I guess all the investors are back from their vacation, which is why it's a good time to really look back at 2017, give you a sense of who the top investors are, who the top investors were in two crucial categories in the startup ecosystem. One, of course, is the angel category and the other is the VC or the seed category. As usual, the people collating all this data for us, crunching the numbers for us, are our friends from Venture Intelligence in Chennai. So without any further delay, let me actually bring on board the guests that we have on the show today to really take you through the deals in 2017, how they stacked up versus the previous year, and what we have to look forward to in the coming year. So joining me on the show today, I have Arun Natarajan from Venture Intelligence in Chennai to really take us through all the key headline numbers. I also have a special guest joining me, Sanjay Nath from Blume Ventures. Blume has come at the top of the table when it comes to VC investments. So Sanjay Nath is also joining me live from Mumbai. We are also shortly going to have Saurabh Shrivastava, the co-founder of the Indian Angel Network, joining us live on Startup Central as well. Now, in terms of angel investments, IAN has come at the top of the charts. So I guess we have both the investors who've clocked maximum number of deals joining us live on Startup Central. Arun, before I get to Sanjay, I have to ask you to take us through the headline numbers in terms of, the quantum of investments, number of deals, and of course, who came at the top of those league tables.
Sure. The 2017 numbers, as we've been discussing on your show every quarter and even every month, has not compared, unfortunately, too well to even 2016, let alone, the huge year of 2015. Just to get to the numbers, year on year, we have seen a decline in terms of angel activity, by about 40% and, down to around 247, investments that we've tracked. And as far as, early stage VC investments, that is, your seed and Series A investments, we are down year on year, about 30% or, to the 237 odd deals that we tracked. So macro, we've seen this, play out in the past as well. Once you have a very big year, which is, 2007-8 in that, case, and now, 2015, we've seen two continuous years of decline for the system to adjust itself. As look like, maybe call it, indigestion, call it hangover. But, looks like there is good news towards the end of the year. What we did see in the Q4, seed and Series A investments bounced up, by 20% at least. All of these I'm talking about in terms of number of investments, and angel also bounced back from the, very low numbers we saw in the middle of the year to around at least 30 investments happening towards the end of the year. So the end of the year has been good, but overall 2017 has not compared, too well to even 2016, which itself, as we know, was a down year compared to the all-time high of 2015.
Right. At this point, I think I have to address both the investors in news today stage-wise. So before I get to the seed Series A stage, which is, the area that Sanjay Nath is in, I'm going to get to the angel stage. We have Saurabh Shrivastava, the co-founder of Indian Angel Network. So, according to the data compiled by Venture Intelligence, IAN has come at the top of the charts, followed by Rajan Anandan, Venture Catalyst Angels, Kiritsu Forum, Chennai, Girish Matrabhutam, as well as Mumbai Angels. But if I look at the total number of deals, there were 247 angel investments in 2017 versus 427 in 2016, which, as Arun said, was already quite a subdued year compared to the euphoria we saw in 2014 and 2015. What really explains this trend, or is it a good sign that a lot of Me Too angels that we saw suddenly on the horizon in 2015, 2016, there's been a shakeout, and now you only have the serious investors in the ecosystem? Your own take, sir.
I think it's a couple of things. One, I think overall the number of startups that we saw were fewer than we saw last year. So I guess a lot of the Me Too type entrepreneurs, didn't get through the filter. Let me put it this way. And so that was one part of it. Yes, I think a number of people who sort of got, as they say, irrational exuberance and thought they'd become angels, probably went overboard, made investments, and had maybe unrealistic expectations of how soon they'll see a return. So some of that would have stepped back. I think some level of angel investing also dropped a bit because of all the tax enforcement on this angel tax, because a lot of some startups actually chose to migrate out to Singapore, even to the US, because once they did that, they could get funding from Indian angels. And I know that at IAN, we've made a number of a number of investments on companies that migrated to the US or Europe, because then there was no angel tax if they did that. And I think some angels were put off a bit, particularly many of our members overseas, as the tax authority started to try and get all kinds of information and details and try and enforce this Section 56 or angel tax issue. So there was some discouragement from there. It was a combination of things. Although, as you said, I think there's been a lot of acceleration towards the latter part. The number of deals that we actually looked at for investment did go down a bit from last year. The number of investments we made went markedly down, but it was a very good year for exits. I mean, we had a record number. We had an exit virtually every second month. So it was an exceedingly good year, at least for IAN, on exits. We did almost like 7 different transactions on exits, which is very large, above average for us. And that may partly be because there were companies already for the VCs to come in. But yeah, I think this is early days, for angel investing and even early stage VC. I think it's beginning to, how should I put it, mature. So I suspect this year will be a better year.
Right. Hold your thoughts there, Mr. Shrivastava. Time to bring in Sanjay Nath. Sanjay, thank you so much for joining us live from Mumbai. So, according to Arun's table, you've come at the top of the list with 16 investments, followed by IDG Ventures India, Axel India, Matrix Partners, and K Capital. But if I look at the overall numbers, early stage VC investments, and we are including the seed and Series A here, the number of investments for 2017 was 237 versus 327 in 2016, and but in terms of the amount invested, the gap is narrow. It was $551 million in 2017 versus $595 million in 2016. So, broadly, what's your own take on the year that was, and, Blume coming at the top of the charts at a time when everyone was saying, all these VCs are raising so much of money, but none of them are really investing where they should be investing. What really drove your own investment strategy during this period?
Sure, Chandra. First of all, thanks for having us on and putting us in the hot seat soon after we entered 2018. I think the last couple of years, 2015 to maybe 2014 to 2016, was a period of slight overinvestment, right? In that sense, I think we were very active. The ecosystem was very active. I think I think Arun's data is great. The encouraging part of 2017 for us is, while our thesis for the larger fund, the 60 mil fund versus the first fund, was that we would actually do fewer investments, but we would invest larger checks. So in that sense, we've stayed true to our strategy. We found that the quality of founders, in one sense, they're a little more mature. We actually have founders who are actually coming out from, unicorns and starting their own companies. They've seen some of the mistakes that have been committed. They've seen the successes. So I wouldn't reach so much into the numbers. I would say, again, 2014 to 2016 we perhaps as an industry, backed more companies that were needed to be backed as a whole. So in that sense, I think it's rationalized and it's a bit of right sizing in the market. If you look at, I think the outlook for 2018, which we'll come to in a bit, I think more of that will continue. In general, we've seen investments taking longer to pan out, between stages. There's a separation between the seed, the angel to the seed to the Series A. So I think investors are investing with a little more scrutiny. So I think 2017, just to sum up, I think was a period of rationalization. It was definitely not, I think we made far fewer investments compared to the previous year, but they were still, quite substantial. We are almost like 75-80% invested from this current fund. So I can't say we were not active. We were doing almost one investment every month, and again, a bit of quality over quantity. I think the quality of founders coming out today is quite high, and we were quite happy with what we saw in 2016-17, and the problems that startups are trying to tackle is also very different. In the sense, today we're seeing from pure e-com verticals and horizontals, they're moving to enablers, right? So we did like Locus and logistics. We're now looking at a couple of bike sharing companies. We're looking at IoT, robotics, and we had looked at those, but I think what is really interesting is founders are trying to solve some very unique India-specific problems also, where in the earlier couple of years it was a bit of, I wouldn't necessarily say copycat, but there were more traditional types of investments.
Right. Mr. Shrivastava, would you concur there that, one shouldn't look at just the quantum of deals, quantum of investments, that it was also a very positive phase in terms of the quality of founders that Sanjay seems to be alluding to? Do you want to comment on that, sir? Have you seen this change happening even at the angel stage as well?
I would agree with him entirely. I think this has been happening year on year, and it's getting more pronounced as we go along. I think the quality of the founders is clearly going up. I mean, really serious, solid professionals are really looking at coming out and creating really thoughtful ventures around some solid ideas. The second thing that's going up, apart from the quality of entrepreneurs, is actually the quality of what they're doing, the level of innovation in what they're doing. So we are seeing very little of the Me Too stuff that we used to see. And we are seeing something, I mean, in healthcare, for instance, we're seeing companies that are trying to grow human organs. We're looking at people who are doing drug molecules. There are very exciting companies around the area of security on IoT. There's a couple of people whom I would single out are really looking at. One is the VR space, and there's another one that's on AI. And they're doing things that are truly competitive with what's happening overseas. So while we've actually, I think the number there was a bit lower because we had, I think, 4 out on term sheets, which have since closed. So the number is a bit higher than what it might show. But nevertheless, I think I would say that I'm very satisfied with the kind of investments we made. And it is getting better year on year. So I'm absolutely in total agreement with that. Because I think a larger percentage of the venture that we're investing in today, I think have a real chance of creating something that would sustain and that would be of interest for many rounds of late stage funding. So I'm overall encouraged. I mean, yes, the number may have gone down, but I'm encouraged with where we are heading. And I think it's part of the process of maturing. So I am not uncomfortable with where we're going.
Right. On that note, I'm afraid we have to take a break at this point. But Arun, Mr. Shrivastava, Sanjay, please stay with us, because after the break, we will talk about where you will be putting your money in this year. Is fintech going to again dominate as far as themes are concerned, or are we seeing some new themes emerging? Stay with us. Come back on the other side of this break on this very special edition of ET Now Startup Central. Welcome back to this special episode where we have the top investors from 2017 joining us live on Startup Central. The first half of the show, Arun, Sanjay as well as Saurabh took you through the key investment themes in 2017, how entrepreneurs came of age during this period. But to really analyze what's in store for 2018, I'm going to take it to Sanjay first. Sanjay, if I look at the popular themes for investment in 2017, clearly fintech has led the pack with 33 investments going into this at the seed Series A stage, followed by e-commerce, health tech, microservices and deep tech. What in your mind is going to be the top theme for 2018?
Sure. So Chandra, thanks again for putting us on the spot. I think one caveat that I'll say is that as VCs we actually shouldn't be in the business of predicting trends. But it's the job of the entrepreneurs to do that. But what I will share is I'll share a bit of the macro drivers that are driving these trends. If you look at what is really driving fintech, it is to use a cliche, it's really banking the unbanked, right? The fact that through, let's say, the new smart feature phones and thanks to Reliance Jio, the next level of, the 200, 300 million users are coming online. You look at, Aadhaar and look at what's happening in the fintech space, all the government's initiatives, UPI, that is really making fintech a great leveler. So as a result of that, you're seeing, we're going to look at, P2P lending. We had a company called Chiller. We have Turtlemint in the insurance space. We have SlicePay, which is student lending, and we're going to see more and more of that, because the fact is that you have a new empowered class that, in addition to all the urban population, is coming online, and that is now moving to a sort of cashless economy. So that is really the driver behind fintech, ad demonetization and ad things like that, and that's why. But even within fintech, I think we'll see some new ideas. We're not going to see more of the same. For example, payments is done. You already have Paytm and MobiKwik. I think we're going to see sub variants and some interesting categories. So I'll say fintech is right up there. I'd also say content, because think about it, right? Today, the same class of users. Look at let's call them let's say the blue collar workers. Our maids, our drivers. They're sitting and consuming content, right? What are they really going to consume? So regional languages. Today, one is leaving like WhatsApp voice notes. They're on every app that we are on. So content is going to be huge. Local entertainment, local languages, Indic languages. We were at that Google event and they were just talking about how voice, for example, is really taking off. How local search and local regional language search is taking off. That's second. The third sector I think is very interesting is healthcare. Fund 1, for example, we hadn't made a single healthcare investment. In Fund 2, we've already made 4. I think the population of India has suddenly become very health conscious. The mobile phone has enabled that even more. And I think the last sort of sector would be B2B, but for a long time B2B meant mainly SaaS, right? You had the likes of Freshdesk, Fresh Sales Now, and the others really leading the charge. I think today, like Mr. Shrivastava mentioned, you might have the next nest coming from India, true product innovation, IoT, robotics, look at cloud, AI, machine learning. One of our companies, Locus, for example, has actually hired PhDs from the US because they're very serious in really developing their data science and ML capabilities. So I think B2B has moved far beyond just SaaS, and I think we're seeing these cross-border entrepreneurs trying to tackle very different problems, really taking on the world. So a couple of sectors there, not necessarily mean that as a prescriptive stance, but I think we're very excited, very new sectors that entrepreneurs are going after.
Right. Sanjay, I'm going to ask you to forgive me for putting you on the spot again, but I'm going to get Arun to ask you a question. I think he's been wanting to ask you a question. I don't know what it's going to be, but Arun, please go ahead.
Sure.
No, nothing really, difficult for Sanjay. He's already talked about fintech and health tech, and these are sectors that we are seeing both angels and seed level investors, kind of are increasingly doing. My question is more on the dollar front, right? So like Chandra, you had mentioned, the value of the deals has not come down, while, the number of deals has come down. It clearly shows up in the data that, even though the number of companies getting money has come down, they are receiving bigger checks both from seed and, Series A investors as well as probably angels as well. So my question is, having raised a fund for people like Blume and others, so much of dry powder is supposed to be there in the system. Now that e-commerce and B2C, across the board, whether it is e-commerce or whether it is things like, edtech and obviously food tech have all come down, where and fintech stepping in is not seeming to absorb that kind of capital. So point is, where are you seeing the dollars going towards? Can fintech and other sectors really absorb the kind of capital that, a B2C e-commerce that we've seen, so far absorb? So how do you really deploy your fund?
Right, Sanjay, I hope you.
No, I think that's a great question. Yeah, I think what Arun was asking is that how do you really deploy the dry powder, right? What sectors will absorb the cash?
Yes.
Right. That's
Yeah,
right.
is that right?
Okay.
Yeah.
Yes, that's right.
No, Arun, that's a great question. I think it goes back to exits, right? The fact that now that we're seeing exits happen, not few and far between, but happening more and more, with Naspers and with the Chinese and with SoftBank all coming in some cases giving partial exits, in some cases buying out entire stakes. I think those are very important because that also gives the confidence to VCs to invest faster and more substantially. So, if you look at content, for example, content and entertainment is an area which actually can absorb a fair amount of cash because you may not monetize immediately, right? So, which means that for a long time you're actually burning cash when you're acquiring users and providing them a lot of value. So, if you look at content and media, unless you have a subscription model or unless you're getting money from ads, it can absorb cash. Fintech again depends on what you're really building. Customer acquisition costs are quite high, so in that sense again you will see a lot of investment dollars going into fintech. On the healthcare side, if it's a B2C play, again that can absorb a lot of cash because you're acquiring, you're spending money upfront to build a brand, to acquire customers till they actually start subscribing. If you're providing some free information, it can absorb cash. The one exception actually is B2B, because the advantage with B2B is that once you actually get a recurring steady base of enterprise customers, you only need cash to grow. So it's a good problem to have, I'd say, but I will say that we'll be investing with scrutiny and investing more slowly at a more measured pace.
Right. I'm afraid we are completely out of time. I'd love to go on and with more questions for Mr. Shrivastava, Sanjay and Arun, but that's all the time we have in this edition of 18 Hours Startup Central. Thank you all so much for joining us for that recap, for listing out the themes. We will catch up with you in the coming months to see how all this is playing out. But thanks so much for joining us in Startup Central, and stay tuned to 18 Hours for news and updates.